yesterday and today, that the easiest thing for me was just to not look at it, and it was hard. Hard to not look at it, isn't like it's crazy. It's like once you're in it, if I trust the zones, as soon as I put my stop loss. So yesterday, oh, what have I done? Yesterday with these guys, so I'd scaled in. Where's my pen? Okay, so got into the first position here.
Yeah.
And then as price pushed up, scaled in, and then as it came down, had another had 2 entries here, 2 entries here. So average price was more or less like here, just because the size of these guys aren't as big as these ones, so it doesn't move the needle as much. And just left my stop loss underneath. Though as it came down, didn't see it. I did see it as in drawdown momentarily, and then but as it just pushed up. So normally I would be out of that trade if I was pretty conservative.
Yeah.
And then today, so got into this position in over by the time, because this one had I pushed sell and I didn't actually, like I must have missed the button, but I didn't actually trigger. I was like, "Whoa, what's that mean?" But then as that one closed, jumped in. It was about here somewhere, and I had some other entries because I thought as it pushed down, I was pretty keen for it to push down just a little bit further. So I'm looking to see if we can get a buy here if it pushes into this green zone, and that's where my target was. Then I had some. I had 2 other entries, thinking that look, if the worst, like this is the range that I thought would be there, and now if price actually, because I was a little bit concerned how long it took, whether it would break above here. So I had my stop loss above at this point here, and I had 2 pending orders right here. And as price came up, it was even lower than that. And the stop losses were the same. I was comfortable with that. If we're closing out of that, then I don't want to be in it. But I don't want to have my stop losses too close in case it does a wick up. So this one is closed out now. The one that was in here. As price it came down, as it sort of bounced from here, I thought, I'm kind of been in this for a long time now. Who knows what NYSE is going to do? So yeah, that's about it. Best thing for me to have done, because like I was had alerts going. I was like, geez, where these alerts aren't going off. So I was checking it, and the hardest thing for me to do today was not to check it. That was literally the hardest thing to do. Everything was set. I knew how much I was going to lose if it pushed up there. I was like, am I okay with that? I was like, yeah, I don't want to, but I am okay with it. If it pushes down, I'd be very happy, especially if it had triggered these trades. I'd have been very, very pleased with that move down. It's not as exciting just because it ended up just being it was just my first position, which is not really the size position, unfortunately. You get these ones here, even though the lower lot size, the risk reward for these guys is far, far better. Anyway, kind of annoying to see it go down further, having get out and not capitalize as much, but yeah, and it is what it is today. So for Naz, hey Samir, how are you? Hey, actually, how are you, man?
Hi, Dan. How are you?
I'm good. I was in NAS. I was in a NAS trade right over here yesterday. I was in there for a sell. But I had a bullish bias yesterday until I was diving deeper into the news. I was bullish. Now I'm still bullish, but I'm just waiting to see. Like, I'm just not sure where this goes, how far, because we've got a new theme coming in now. We've got the recession theme. That's going to be kryptonite for this. Gold's done a number.
Gold just dropped 100 pips in about a minute.
Yeah. 3 o'clock. Actually, are you in sales, mate?
No. My bias was bullish today, so I got like a 30 pips today.
Oh yeah.
After that, it came back to my entry.
Yeah. Pretty keen to see what it does at this. I was saying this yesterday. Oh no, where was I saying this? Maybe it was in today's earlier stream. I'm very interested to see when we get down to like this area. Very, very interested to see what price does. Cool.
It's the first day in a long time as well. You've got the Dow and the Nas going in opposite direction. Hasn't happened for a long time.
The Dow and Nas. Yeah, look at that. Far out. See, Tesla. I can understand why Tesla's dropping, and that's going to have a huge portion of why Nas is dropping. I don't quite understand Apple. I can understand Apple. Don't quite understand. I think maybe it's just contagion. But Tesla, they cut their prices for some of their cars, so that's going to potentially cut productivity. Apple, they're having to remove that blood oxygen sensor from their Apple Watch because that patent they got ruled that this court case, this patent copyright court case, could last all year, that they can't sell this particular Apple Watch, so they've just decided to remove that little sensor to get around it. So I can see Apple selling off, Tesla selling off, but it looks like all the big seven: Tesla, Microsoft, Amazon, Apple, Nvidia. Haven't got Google on here, but they're all for sinking. Looks like Boeing finally caught a bid. See Boeing, man, when they got grounded, just that's $70 stock. Like the stock price has dropped nearly 25%. Anyway, early days. We're only 30 minutes into the open. Okay, German. Let's set an alert. Let's set an alert for this green section, so I can be notified when we hit here. But I'm more interested in NAS, especially NAS having dropped 250 pips already today. I'm looking for a reversal. Let's see what sessions we've got. So let's London low, Asian high back over here, New York 50% with the London Asian low and the London high. And then New York 50%. Cool. All right. That lines up pretty nicely with the London 50% and a New York high in this little area. Let's just mark that with a rectangle. Okay. Yeah, that sweep down. If I was a little bit faster, that is a potential, this candle on the 4 minute. Hopefully we get another leg down. But that's a nice sell-off. Oh yeah, look at this. Combine these two candles together. Price coming down. Any sort of reversal off of this guy. It's a nice little zone there. How much we moved? Did anyone grab that?
I had a buy mark in at
Yes, I took it.
Oh, good one, Samir. You had a buy zone, Russ?
yeah, at 600, but I didn't take it. It's just gone through it.
Oh, at 600 up here. Yeah, it went
Yeah.
down another 40 pips.
Yeah.
Yeah. Do you understand this section? Why I've got like this area?
Yeah.
Just flagging that? Yeah, cool. So compared this to 600, were you looking at the London high?
That was it. Yeah, it was the it was that London high, 'cause it did pause there for a minute.
Yeah. This is a pretty significant low. And when you get lows like this broken, sometimes it's like the algos you can get like a flurry of sells, so it can drop like a fair bit lower. See, like this one, same thing, and it dropped when it broke, dropped it quite a bit lower than the New York low. Same again, New York low when it breaks, it goes like a significant little break. Same again. So when you got a New York low and it's breaking it, that's it's not like, usually doesn't stop 10 pips below the low. It'll be a bit bigger. Something to keep an eye on. So like, you could have had like that as a sell zone, buy zone area, but let it sort of rip down underneath to get that reaction, rather than being too close to a low. If it's a London low and it's New York session, they don't, like, they can just take London lows just a little bit, but New York lows, when they break, because they're usually like a daily low or a daily high, you can get a flurry of activity.
Yeah.
Oh, sorry about that. Okay, yeah, that's a really nice trade you got, Samir. Really nice.
Yeah, I got good.
All right, so
Uh,
have you secured some?
not thinking to secure, but
What was that, sorry?
yeah, I'm not secured yet, but I'm thinking to secure, but yeah, let's watch. I'm doing it now.
Okay. It's like German had a nice reaction as well. At the same time.
Yes.
All right. Let's check the news. -0.1 versus -0.1. The retail sales are good. Bowman, hey, this guy's a bit of a hawk. All right. Well, let's see. Yeah, I'm fairly keen for this yellow line to see if we get another reaction from it. Or the here. So these ideas. Because I haven't got this one. And the timing, I don't think this is the final move. I think like we could very well could retest this low. So I'm keen on this idea. And I'm keen on this idea. I'm not sure how, if this does become the low, I'm not sure how I'll get into this just yet. What do you guys think?
I traded that much in NYSE recently, so I cannot comment on that.
All good. What about other things? Are you looking at gold for anything else?
For gold, I think tomorrow will be interesting one. We may hit that 2000 area before we get a buy from that area.
Oh, really? Think a big more of a sell-off?
Yeah, right now it can be a sell-off.
Mm-hmm.
So you think there's still more to come down on them on that?
The range is pretty big already. It's more the timing that I think there could be another leg down. Just because it's like, it's so 45 minutes, this candle, like into the New York Stock Exchange Open, I could see people willing to sell it, willing to buy from this area, but it's just that, like, once we got these clean candles down here, I feel like this is just potentially a reaction from this zone, and I imagine that we would test this a couple times rather than just having this V-shaped reaction. So it's more the timing. Like, we see this V-shaped reaction here. This is how we do get price. I'll change the time frame, but like another big day. But price open. I'll change the 30 minutes, a bit easier just to understand. But price pushed down, big reaction. I think this is CPI, wasn't it? Yeah, last week came down, and this candle. See this 3 o'clock around the same time. We did get a big reaction from it, and it was kind of like in the same sort of vicinity of that New York session to the left over here. Then price came back, did a fairly steep retest because that's like 100 pips. But then it pushed down into the London close, and then from there we got the reversal. So same thing again here, like around the same timing, we got a push up, and then around the 3 o'clock we got a bit of a correction, and then it pushed up higher. So it's more the timing that I'm a little bit sus. Nothing day on this one. So this one, 3 o'clock, 3:30, and then this is yesterday. So the reversal really started around 4 o'clock. And that's what I'm just wondering about here, is whether this is just, at the moment, just going to be a bit of a pullback, and then they're going to have another drive lower for London Open before it pushes back. And given that we're in the same sort of ballpark of this New York session, I could imagine we go down just a little bit lower. Because I can imagine that a lot of people, when they jump in now, price is looking good. And remember that day, when was it, last week some stage, that we got a good move, like 70 pips, and then it pushed down again lower, and then like even I was just like, I'm kind of done now, I'm not going to look at it again. And the move came down, and then we got the reversal late. So that's just what's on the back of my mind. I kind of wish that would just be like nice clean moves, but I don't think so. Hey, I think it's going to do something else, something funny into London Open, and then once it's sold off so much, someone will come in, start talking the market back up. They've probably got their position on as well.
Yeah, it seems to be how it works. The more and more I look at it, more that financial juice one that first time I saw it was with you. It seems to be a lot of reaction off that.
Mm.
Well, a lot of information on it, rather.
Yeah, it's quite good for headlines. It doesn't get everything. What's annoying is like when you just like, without watching the speech or reading the speech, when you see the headlines, I get so frustrated at these Fed speakers or like bank CEOs, JP Morgan's, Goldman Sachs's. The banks are a little bit more they're a little bit more specific with their wording, and because obviously they've got their agenda. But when it comes to like Fed speakers, they're so contradictory. It's just amazing how it really does. Like, they'll say all their stuff that contradicts the last thing they said, and then the market will just choose to react off one thing that they said. Yeah. And you're like, but they also said some good things and some bad things. So why is the market? I think that is a little bit of like American mentality. Every time I've watched like American sports and things, they really overreacted everything.
It's whatever comes first, it seems. The first line they say is what it moves from.
Yeah. So it comes up, lower high. I didn't want to entertain. So I find reversal a little bit easier to spot when we've moved so much than just taking these continuations, because the thing is, unless I've got a clear structure or a clear area where I see that like they've consolidated and then we move away, I know price can retest like these areas, but at least it gives me a bit more confidence, like today's move, German 40, where my stop loss will go. But if it moves up and pushes down, has this V shape, I really don't know how high this will go. So I really don't know where to put my stop loss. The momentum's definitely to the downside at the moment, though. So I'm kind of like, that's what I was saying to Samir. Like, it's kind of annoying when you scale out and then it pushes up so much more. But it's also about like trying to just make sure you grab a profit from a trade. Sometimes you can leave it running. Sometimes we'll just keep on pushing up without, like, after you've secured. But given like these kind of reactions of timing, it's better to take something from the table, because so many times it just comes back. Like, you very rarely get this V shape unless there's news at this time of day.
Yeah, agreed.
See the shape of this? How it pushed up, came down, pushed up, came down, pushed up, then eventually gave the ghost. Like that. Wouldn't mind seeing something similar today. How far this one goes. But seeing something like that inside of the zone, you can see why people call it W's and M patterns. But seeing something like that here. Pretty nice reaction. Very nice. Still not in the zone that I'm looking at. Gosh. Not sure if you can hear that. She knows exactly what she wants. She's a little happy, you put it down for a second, instant tears.
Such a lovely sound, Hayden. Takes me back a few years.
Yeah. All right. What do you guys? Are you planning anything from here? Buys or sells?
No, not at the moment.
Mm-hmm.
Looks like going up, but not sure.
Yeah, I'm trying to just find a target as well that I think that price will go to at some stage, and I'm not really seeing anything. Nothing actually standing out. I feel like there's a lot of moves happening. There's a lot of opportunity. I'm looking to find the opportunity. I'm trying to visualize how I can even potentially get a sell in here. So timing wise, this 30-minute candle about to come to a close. Curious what the next one does. Being part of the hour candle. Oh, you're going to say something?
No.
Russ, are you keeping an eye on that, on Dow as well?
Yeah, I very nearly bought. I keep doing this today and yesterday. I've done a hell of a lot of very nearlies and not actually committed.
Uh-huh.
Yeah, when it bounced back to the London high at 270, I was tempted to take a long position there.
Mm-hmm.
Gold still falling. Gold still coming down.
Geez, 2008. Feel like this area is... This needs to be mitigated at some stage. I'd like to see a fast move. Fast move up into some area of liquidity. Even if it works its way back up to this area. That was NYSE. Institutional push.
See you guys. It's late for me now.
Yeah. So,
It's morning.
catch us, Amir. Yeah, trying to find something here. It's taking its time.
Yeah, it's a bit slow at the moment.
Mm-hmm. Okay, I'll catch you in the morning.
Okay. See.
Seems to have stalled somewhat, hasn't it?
Yeah, it feels like it's stuck in this, in a holding pattern. Hey, this range. It's not a clear range, the ones I like. And I was thinking that this is a pretty decent area for it to react off like it has. So I kind of just want to see now this as a fake out up here. And then I'll probably just give that a go for it to then push down. And I think then by that stage, it gives plenty of looks for people to take it long to sell from. Plus, I don't want to enter here just in case this does hold. And then by the time it breaks, then I'm only, if it breaks, I'm only getting down here. Then I'm only gonna be looking for like maybe 20 pips. So I'd rather just push up, give a clean push, and then be getting closer to the hour candle closing, and then trusting like that, keeping the stop loss fairly tight, looking for a reaction candle that this area can hold. And that we could actually drive down to make that new lower low.
What are you looking at? One.
Yeah. So this could, like, it could keep on driving up. So I'll probably go over wider stop loss, and I'll be willing to give it a few entries that if I see a entry that I like up around this area, I'll go in, stop loss will be wide. If it pushes up, gives another entry that I like, I'll be willing to give it another go. This one obviously will be, I'm assuming that this might be just a bad, like an early entry. So I'm going to keep my risk pretty low on that one. It needs to give me a liquidity candle above here. So I'd like to see, like, say on this hour candle, if this had a lot of volume in it, I really want to start seeing like this area of it holding. If we start seeing price pushing up into this wick, then I would think that this looks like a pretty mighty fake out. So anywhere from like here to here, I'm looking for reactions. And then visualizing what this hour candle might look like is a candle. It could be more bullish than it is, or like have a high wick and hopefully closes something like this. Next one, have a long lower wick, and then do that wick fill in the next hour. That makes sense?
Yeah. It had quite a strong, albeit very temporary reaction off that 640 there.
Just then, yeah.
It was a very short one.
This one.
Yeah.
Like a 12 pip reaction. Yeah, because I don't see anything here that really stands out. So it's like a first structure. So I think the second structure is more likely to hold. But price, if they do want to get in, they may create that lower high below here. 5 minutes looking nice from the downside. Like this candle, and this candle. All pointing to this push. Yeah, I'm gonna wait till it hits here. Oh no, don't do this. Don't look like it could potentially reject here. It's too low.
Might just be a pullback, Hayden.
I would say the way it looks sus, the way that it closed above.
Mm.
So I'd imagine that it's going to go up more. But there definitely is this channel. Definitely is a channel like that. So I can understand that if it's just a pattern algorithm, that we should see some like little reactions from here. But to bust out of this area, I'd like to start to see this pattern start to fail and we get that acceleration.
Yeah.
If it does just sort of grind and do this, it just makes it really tricky for me to want to put any risk on it.
Mm.
Gold bottomed out at 2006, which is getting in line with this area, in line with this wick. This zone. See if I can break into it and sell off. Yeah, I think it's gonna be a little fake out.
Just a bit of a double top happening.
Um,
The M1 is 1 minute.
Looking good to sweep.
Mm. Mm.
I'm gonna try a buy. I'm gonna try a buy up to the London low, like this area, into my sell zone. So, see if this breaks.
I got in just before you said that. I'm not sure where to put the stop there right now.
Yeah, if it drops a little bit lower, it could be a concern. Probably a second structure. So for this move to go up into here, underneath this one. So this is your first one. This is your second one. It's kind of overlapping. I'd say that we can probably, even if it drops lower, we can get reactions from here first to go up. Like, worst case is down to here. So I want to keep it underneath this. So trying to target somewhere to here. Risk reward's not great, but I'm willing to try, like, potentially scale in and just have like something I'm not too stressed about as well. So if it comes down and gives me more rejections, I will add to the position, and then when it finally starts looking like the low is in, I'll tighten the stop losses. If this first entry is not very accurate.
Even for me to add in on SC2, I have to just add a whole new.
Yeah, new trade.
Yeah, okay. And just make it smaller than the original. Is that what we usually do?
I preferred my scale and entries to be smaller. Yeah.
Yeah.
If that's if I'm adding, that's if I've got a good position and it's moving in the direction. My add-ins are smaller. If you're adding in drawdown, the two ways is either same thing, is add in a little bit, like, less size. If you're risking, say, the other option of doing it, if you find that more often than not your first position isn't very accurate, what you can be thinking is, like, how much risk do you want to apply to this idea where price is going to go to this level and you don't want it to go to this level. Now the only thing that's in question is your entry. So you could say, like, for this idea, I want to allocate 1% risk. So then the first trade would be, say, let's just say this is working like quarters or thirds. So say you give us 3 shots. First entry could go in here at 0.25%, depending on account size, of course, as well. And then if it comes down further, then you can add again. If it gives you another entry confirmation, now the second position is going to be, the idea is still not to go to this low, but the second position might be in something like this. But if you're keeping this as 0.25% as well, it's going to be bigger volume. And it's not actually a bad idea to do it that way if you find you're quite often getting in and it's not the right position. Well, it's not the optimal position.
Yeah.
Like, we don't want to miss the trade.
Yeah.
So, but we don't want to assume that it's going to come down to here to get good risk reward, because likely it's not.
Mm-hmm.
So we've got to kind of find something that works for both. So there's two different strategies. If you're going in percentage, then you're going to be adding more size. But that's kind of good because it brings your average price down faster.
Yeah. Okay.
So that eventually you're going to get a much more optimal average position with a stop loss, which makes sense. And then when it goes, you're improving the risk reward on it.
Okay. I haven't thought of that. I've done very little with adding in.
It's definitely a tricky one to navigate.
Thank you.
You're welcome. It's fantastic though when you start getting really comfortable with the entries and explore different ways of entering, because if you never that's the one thing, is like if you're in a bad position, as in not bad position, if your entry is not great in the first place, I don't mind having wide stop losses. Like, I only keep tight stop losses if I'm really, really comfortable with my area and I don't want to put much risk on. But if it's kind of like this where it's going up, we can see the trend, but like what Russ is saying is like, I don't know where to put my stop loss. It's like, it could pull back. It definitely could. So have a wider stop loss if you need, and be prepared to add into a position. Your first position means, like, if you have absolutely picked it, like this is looking really good now.
Yeah.
The downside is that I've gone in smaller than I would like. But it's all about, like, also every trade is a practice, right? Every trade is an opportunity to learn, to apply what you learn.
Yeah. And I like that idea of a larger stop loss, and then you can add in.
Yeah, it gives less anxiety to enter in a trade.
I was just going to say it's much less stressful.
Yeah, it's stressful when it's like you enter and you really like it could just whip down.
Yeah, you can get taken out so quickly.
Yeah.
And then I just look at the wounds.
So I'm going to secure a bit here.
Okay.
Because it's a getting into my areas. Plus, I really do prefer to sell if it gets up to here. And because I've moved my stop loss now, it could very easily come back down and stop me out for nothing. So because this is like a little counter trend to what I was actually counter to my bias, what I was initially looking for, I'm really happy that we took 30 pips.
Yeah.
So to me, I've locked in something. Like, it's been a nice little session now. I'm still going to plan something here. I'm leaving a runner in case it doesn't stop and just keeps on going now, because essentially it opened with no top wick. So you just added in as I scaled
added in.
Good one.
Stop on the second entry is at break even already, so I'll just see what that does.
Beauty. Yeah, so what Russ has done is the first trade now is risk free. So that first trade is running at zero risk, and that scale in now, he's just put the risk back on, but he's increased the volume for the trade. So if it does go up, the risk is the same as the first trade, but now the risk reward, if it goes to the target, is much more amplified. So if he loses on this, he's just lost essentially one trade's risk. But if it wins, now he's doubled the win. So it's a really good idea to start working that way as well. So like you always keep your risk at, like, say 1%, but if you can scale into effectively, every time you can take risk out of one trade and add another position into it, which is 1%, effectively you can have like a 6% trade on with only 1% risk. But if it hits your target, you start getting towards like 20% returns. If it's like a really nice move. So that's the things, like, you might be increasing your loss rate, but what you're doing is your wins far outweigh your losses now.
Yeah. That's what I've got to work on.
I'm just taking it off there.
Yep. Yeah,
just took it exactly 50 pips on the first position, and then I got another 12 on the second.
beauty. Yeah, that's perfect because like the trades are nicer when you add into a position that's running your direction.
Yeah.
So we're just about to hit target now. We might just closed out now.
So when you're closing out, your runners, what, 20%, 10%?
Yeah, it depends on whether I've closed, like sometimes I close 50%, sometimes I close 80%, sometimes I close just like 25% and then tighten my stop loss a bit. I don't always want to move to break even. So that initial risk, which was down to here, if it's pushing up like to an area that I like, I can take 50% off and then move my stop loss here.
Yeah.
So effectively, if it comes down and hits my stop loss, this is a break-even trade. But what I've done is I've increased the probability that my trade can survive any pullbacks.
Yeah.
Cool. All right, let's see if we can get a rejection from here.
Okay.
So it's 4 o'clock now, so we're in London close territory.
It's 2 a.m. here. So.
Yeah, it's late for you.
I fell to sleep, so I had a couple of hours.
Oh, you're refreshed.
Yeah. And I woke up and thought, oh, I didn't get a trade on the London session. Yeah.
It was a pretty tough one. It was just mostly on German to nothing. Like, look at this. It was one clean move down, and then the rest was just really choppy. Okay, this is...
Do you take anything off that reaction, or are you waiting for it?
I was waiting for a candle to close, but then I was thinking that I should have just taken it impulsively. It's
just the down trade.
Yeah. For me, it's I know that I've kind of got it's a period when I've closed the trade, I find it really difficult to be in a trade. I think it's a feeling of not relief that the trade's worked out. I think it is that. I think like I get the trade that works out, and it's a moment of relief that do I want to put myself straight away under another bit of stress of the unknown. So I do like it to close out and then take some time to set up and then get in rather than go in and then straight away. That's a personal thing for me to work on. Did you take it, this sell?
Yeah, I did. It was a little bit late.
What were you saying, Annie?
I usually lose if I do that, go straight into another trade because I'm so, oh, look, just had a good win. I'll get another one. And yeah, I'm not patient. I think
well,
so excited with them.
The least probable thing as well is like V shape into another V shape. So getting the trade from here and then it pushing up to your area where you just get out and then expecting another V shape is not likely. So I mean, it's fine if you're doing hyper scalping because this is a lovely area, London low, and where this was a beautiful buy to sell move. So you can imagine that there would have been some people that were thinking that this is a fake out, bullish candle, and this is a buy move. And now that this area, those buyers are now getting out of that trade. So at least, like it'll probably dip around in here a bit, but there would be that initial, people held all this drawdown with NYSE opening just rapidly going straight down, that there should be a reaction at this point. And it, I think like these ones, you can have like if you've got a quick finger, that was from the candle by itself is 18 pips. Some people wait for these levels and are only looking for 10, 15. Like what Russ was saying is like moves down 10, take some profit, or move to break even, and then just see if it works out. I know
So I might do the second test now.
sorry.
Might just do the second test of going up.
Yeah.
I thought it might just retest and then come back down. Is that an 80% chance, you say, Hayden, for a retest or not?
Yeah, 8 times out of 10, once it makes a high or makes a low, 8 times out of 10, it retests that low or that high. So when price moves down like this, so it's making a low, 8 times out of 10, it'll retest that low. So it's got to be a new low or a new high. So for this one, price was pushing up. Okay, made a new high on that move. So as we get that bearish candle, 8 times out of 10, we'll retest that high.
Which it looks like it's doing now.
Yeah, and part of that can just be the retest, as in retesting that wick as well.
Tempted to go in now? Or?
No, the timing's not there for me right yet. Because the other thing is not needing to pick the highs as well. I know, like, it's nice to do, but we also don't need to do it necessarily, because as price moves, you can really find triangles everywhere. I know I was saying that the V shape's not usual, but what I mean by triangles is, like, as price goes down, it creates, like, this is the triangle. If 8 times out of 10 it retests the low, then this is the triangle.
Yeah.
And then if it's a nice trend, it should make another low. And if the trend is not too strong, like if it's a really strong trend, it only makes like little tiny pullbacks. But the main thing is that we don't necessarily need to be here. If it gives enough space where price pushes up and you're expecting it to continue in that direction, you're looking like anywhere inside of here is the meat of the move. We don't need to pick the high. We don't need to sell it right at that support in case it's a double bottom. But if we can pick the meat of the move and just trade from here to here, or like wait for rejection wicks and really get a clear sign that the resistance is in, then that can be quite a safe way of trading. So I thought the objective for this move, I hope Samir held some, because I said to secure, but I hope he didn't secure the whole thing when it pulled back, because he'll be pissed off at me if that's the case. But now that it's moved from this low back up, they've brought it back up to this London low now. So I think that was the plan. Now we need to work out if we're going to break up and actually take out this gap or make a new New York high, because a lot of the time NAS will take out London high and London low. So I'm just wondering what this is going to do. If it was a first trade, then I would give that a shot. Because it's not, now I'm factoring in, do I want to give some profits back immediately after taking the trade? And I know everyone's different in this. And a lot of people see, opportunity, I'll take it. Opportunity, I'll take it. And for me, I do like to think that I'm pretty accurate with my trading. So some of these opportunities to miss, I don't want to take an opportunity to be wrong. And I know that's also probably not the most profitable way to trade. Is if you see an opportunity, technically you should just take it. But I know my previous trade result always does impact my next trade. If I take a loss on the first trade, I'm keen to give it a second chance. But then the way that I manage that second trade often is if it's in profit, I will like to clear the slate and then sort of recoup that loss and finish the day ahead. If I take a win on the first trade, I'm less aggressive on the second trade, because I also don't want to give back all the wins from here. But it's looking like a good move to have traded from here to here, and it's looking like it's given a nice little reaction perfectly from that level.
No.
Cool. All right. Well, I think I'm going to scoot. What I'm more keen to do is, I was going to say I'm more keen to buy if it drops down to here, but that idea initially when we were down here, it's looking more and more unlikely. So I don't exactly know what I want to do at this point. I do know what I want to do if it's up here.
Yeah.
But if this happens, what will be really interesting is to see what the yield and treasury auction is going to do. That'll be really, really interesting to see what the bid to cover ratio is going to be, see what the yield interest rate is that they get, because that will give you an idea of are they really pricing in this sell-off. If the bond market is suggestive that they do think a recession's coming, then that will be bearish for the stocks. So a high bid to cover ratio and a high interest rate, like high yield return for the 10-year, will be suggestive of a if they're asking for more return for their money, then that's pricing a recession, and that could be really, really bearish for this. And that happens at they start the auction now. They sort of tell you results way after the fact, but from between now, London close, to 6 p.m. London time, after like New York lunchtime, that's when the results come out, and that's why we get some of these wild whipsaw moves from like 4:30 to 6. Yeah, cool. Alrighty. Well, thanks for being here, guys. So I'm gonna get going.
Thank you so much.
Cheers, Aiden. Thank you.
You're welcome. We'll see you tomorrow morning. Yeah.
Yeah. Cheers.
Okay. All right. Catch you, Annie. Have a good sleep. Russ, have a good evening, mate. See you soon.
Steve.